welcome to our market today. I have with me Amur S. Lakshminarayanan, the Managing Director and CEO of Tata Communications. Amur, welcome to this conversation on your most recent quarterly performance. Before I get into some of the numbers, Mr. Ratan Tata has passed, as we all know. And I wanted to begin by asking you to recall Mr. Tata, perhaps in one of the strongest memories you have about the corporate titan who held the Tata Group for so many years and took it to where it stands today, Lakshmi.
Thank you, Siddharth. I think the first and foremost is going to be sorely missed. He was the driving force behind the Tata Group investing into the Videsh Sanchar, the VSNL, and he briefly was the chairman of Tata Communications post the investment into VSNL. I have had many interactions, particularly when I was in the UK. The story that I recall is, we used to be in 18 Grosvenor Place, which is still the Tata Limited, overlooking the palace, but it's an old building. And TCS, we were operating on the top floor. So on one of the visits, he met and said, Lakshmi, this is not the place for TCS, which is a technology consulting company. You should be in a better, more modern place. And as it happened, in a year or so, we found another place, but in the Grosvenor Place location. And we had a much bigger office. We had done it up very nicely. We had customer visits and we were growing very nicely. And the next time I saw him, I requested saying he stop by and see the new place. And I received a call in one of our meetings that from someone in Tata Limited and say, hey, Mr. Tata is here. He would like him to come and visit. So I was in the middle of some meeting, but all internal meetings. I said, of course, sure. And he dropped by but such a humble person, he was profusely sort of apologizing to have disrupted my day and said, no, sir, we are all very pleased to have you. And we introduced to some of the teams. He walked halfway through the facility and said, this is very nice. And once again said, I'm very sorry to have disturbed you. The person is so very humble, absolutely no airs. And that's the very first thing that you notice about a person. Besides all the other accolades that people give about expansion into international markets, buying the Core Steel and the Tetley and the JLR and so on. Of course, all of that are big. But what defines him as a human being is what I remember the most. So we all pay very deep homage to the person he was.
Absolutely. And we have been paying homage across all our properties to someone who I would say was completely invested in growing capital, but growing capital with a conscience. Thank you very much for that, Lakshmi. Let's now get on to the most recently quarterly financial performance. Take our viewers through some of the key highlights, including what's happened on the profitability front.
Yeah, I think the three major highlights for me are one is the order book expansion that we reported in the last 2 quarters. That's a very clear sign that even though we have been saying that the decision making is slow, and it so happens that the deal closure time is actually elongated for us. It's a factor of both the macro as well as the fact that we are getting into now larger deals, which takes more time to curate to close. I think both plays into it. But we were always of the opinion that as long as you put more into the funnel and increase the quality of the engagement, something will come out. And that is what has happened in the last 2 quarters, where we were very happy with the results on the order booking that we've had. So that is one very positive thing for us. The second is, of course, the absolute growth in the revenues, both on the overall data and the digital portfolio growth has been very good. Albeit is in the back of with the tailwind of the acquisition that we did, because Kaleyra we only consolidated from October last year, so we have the tailwind of that. But not to take away the fact that there's been the teams have been very hard at work in sort of synergizing Kaleyra with our erstwhile DIGO platform and the InstaCC, which is a contact center on the cloud platforms and so on. I think we're very pleased with that. And the third is our IoT fabric, which is largely the Move platform, has shown very good growth this quarter again. So these have been the three standout things from a top line perspective. And I might also call out even in the next generation connectivity after fairly last 2 quarters of slowness, this quarter is seeing an uptick in growth. So those are the main takeaways. And in the order booking, it's actually fairly across all our fabrics. Our cloud and security fabric, we have had good wins in the cloud and security fabric, which gives us the confidence. And we have been keeping our heads down to invest in the cloud and security fabric. And you will soon hear a relaunch in early next year of our entire infrastructure as a service platform. Of course, the AI cloud is coming. So we are doubling down on investments in each of these fabrics. On the margin side, there was a miss, but largely, one major cause for that is our core connectivity revenues had decelerated. As you probably know, the core connectivity is a high margin, high EBITDA business, and a sort of slowing down of the growth, largely caused by some of the cable cuts that we had internationally in the submarine cables, that took away some of the capacity, and that caused the reduction in the revenue growth. And that, coupled with the expenses that we had to incur to repair and so on, was a double whammy from a margin perspective. Of course, there were other moving parts, but this would be one of the major factors for why the margin was a tad below the expectations.
Lakshmi, this cable connectivity, is this something that is not really a usual frequent occurrence? Any light that you can throw on possible future risks in this regard, and is there anything at all that the company can do to mitigate the impact?
Yeah. No, I think these happen from time to time, and it so happens that there have been more cuts in the last actually 3 quarters that we saw. These are largely the vessels docking and anchoring, and maybe there is more increased traffic. The Red Sea is a hotspot, but nothing to do with the conflicts going on there. But it's just that there have been cuts. So I wouldn't put it to any one thing. These are not entirely under control, so these are covered by our force majeure clauses with our customers. But our customers are only going to wait for a certain period for this, and after that, the traffic has to move. So yeah, I wouldn't attribute to any particular thing, and it's not really something that we can do much about. The only thing one thing I would want to add is, for our customers, the reason why they trust us so much is we are able to quickly reroute the traffic for our enterprise customers and make sure, because that comes from the strength of our fabric that literally runs around the world. We are able to reroute that traffic through multiple other cable systems that we have, or we buy from others for a short period of time to be able to serve our customers. So we don't let our customers down.
In fact, that was what I was going to ask you, but I'll still press ahead. That has this prompted any thinking at your level or at the level of the board for greater route redundancies, or with the abilities that you have, both organic and inorganic, you're pretty sorted?
No, we constantly look at that, Siddharth. We do have a lot of route redundancies, but when we reroute the traffic, the latency increases. So instead of going through the Atlantic, if you go through the Pacific, then the latency increases, right? So that is something, and we are constantly looking at other routes.
And when you have to deliver Formula One traffic, F1 traffic, that's latency is quite a big.
Absolutely, yeah.
But this doesn't require.
And we are also investing. You talked about redundancy, which is very interesting, because one of the conversations we've been having with our customers is, today when people want a resilient service, the only answer to that is redundancy, right? So instead of having one, you have two or three, and create redundancy in your architecture in order to provide the resiliency. And now one of the areas we are investing in is, make our network more composable and intelligent in such a way that we can even offer resiliency on demand, if you will, right? So rather than people having four links to provide the resiliency, we're going to tell them that it's enough to have two, and we will provide the resiliency that you need as though you had four. And that's a product that we would be launching next year. So we are, constantly working on it. We are, as a management team, totally consumed of these challenges, and the board is very supportive to invest in these new areas.
And does that investment thinking, could it imply a full-fledged investment in a new cable by any chance?
No, these are, to make it more composable and intelligent, these are all more software orchestration layers that we are building as opposed to physical, more fiber cables. And of course, as our fiber cables, come to end of life, or we need more capacity, we are, putting in the capex that is needed to ensure that we have enough capacity, because ultimately we need the infrastructure capacity. But this particular thing that I'm talking about is more a software orchestration layer that we are investing in.
Let's come back to the revenue performance. I was wondering if you could provide some more insights into the mix, particularly from digital revenue, because you have a mix between data and digital. Where do you stand, including on the data goal of 28,000 crore revenues, perhaps by FY27, if I recall?
Yes. Yeah. No, I think that continues to be our aspiration. When we set our aspiration a year ago, we said that we want to double our data revenues from what was then a 14,000 crores to 28,000 crore. And our aspiration remains the same. When you set aspirations, you don't really look at what the macro conditions are and so on. So we are a little bit hampered by that. But there is no reason why our aspirations therefore should change. What we are looking at is to see whether the new products that we are launching into the market, does that have a good product market fit? Does it have a future? So if I just take an example in the area of the network itself, we all know globally the network growth, it's $150 billion market. And that has not been growing very much, perhaps grows at 1% or 2%. But within that space, there are new areas which are like the cloud connectivity, the multi-cloud connectivity is a new area. And that area today is only about $2-3 billion, and it's slated to grow at 20%. So we're looking at such pockets where it will have faster growth in that area, and we are investing and doubling down on the investments there. So we have identified such pockets. If you look at the cloud and security, we've been saying that the network security is going to go through a transformation, right? Rather than having very distributed firewalls in some place, securing how you go to the cloud, securing the network, internet, and so on is all a complex set of technologies and is becoming very complex. We are simplifying all of that to, in our world, through a unified security on the network, which can be run and managed from the cloud. So that's another thing, another area we're investing in. We are investing in AI cloud, which even though the take up from the enterprise is going to be more gradual, I think. We think that is a future, and we are investing. So we are investing in all the right places, and we have these irons in several fires, and we are focusing on all of these to make sure that all of these would grow. I think the encouraging thing for us is we continuously test whether these new areas are relevant, and we have absolute confidence that these are very relevant to the future of ourselves and the future of the enterprises that we serve. And that is why we put out these aspirations to say that, look, this is how we would grow.
Lakshmi, between the time of the result announcement and the immediate sort of reaction from the markets, we can now see the stock well in green. Are the markets missing the fine print? Are they concerned about future growth, given the fact that there's also a sequential net profit decline, a pretty substantial one at 37%? So Uh, what detail is being missed from your quarterly performance by market stakeholders?
No, I think that's what we are explaining. I think the a very quick look is a bit misleading because there are so many moving parts within all of these. Right? So when I explain that the reason for the EBITDA miss is because of the decline in the core connectivity, which is a high EBITDA business, and the expenses that we had to incur, I think people do understand. And in the net profit line, there are other factors. So, for example, we are incurring costs today to simplify our international entity structures, right? So when we acquired Kalera, that had multiple international entities, and we are spending money to rationalize and simplify that, and therefore, you would have seen that we have infused something into the Tata Comm UK. There is movement that we are doing from to Bermuda to Switzerland, and all of these, today we are incurring costs, but we believe those are the absolute right things to do, because with that simplified infrastructure, the entity structure, it would enable us to acquire much more easily in the future, and also would reduce the tax burden in the future for us. So these are all the right things to do. But in the short term optics look as though these are expenses that we are incurring. So we are going through a very disciplined approach, and maybe we have to just explain this better to the market.
At what point will the process of cleanup of your past acquisitions and the costs that are associated with that, at what point do you expect in the current financial year that cleanup to sort of be complete?
No, it would start showing up because in our interaction fabric, the Kalera was a negative EBITDA margin company that we acquired. And we said that in the first fiscal year, we would make it EBITDA neutral, and therefore and thereafter get it to a high single digit is what we said, and we are well on course to be doing that. The same thing with the Switch acquisition. There are cost synergies we are working on, but we've also been impacted by other cost increases in the business in the US. But having said that, we are well on our way to get those synergies into play in our media business. And the whole production capability that we acquired through the Switch acquisition is very unique and very important for the full value chain, because when I talk about some of the sporting events we do, we bring all the signals from one place and take it to a central production, which is today somebody else is doing that, and then we take the signals from there and take it to all the broadcasters. Now, the production is a capability that we have acquired, so that completes our value chain end to end, and we believe that will bring greater opportunities for us. So, no, I think we are very, very happy with the acquisitions that we did, and we need to bring the synergies. So the revenue synergies and cost synergies are both playing out as we speak.
One final point on today's conversation, and I'm reading from the press statement where it said that among the multiple strategic measures, land monetization will help create capacity for future opportunities and reposition our assets to capture medium to long-term profitable growth. I wonder if you would be able to expand on the land monetization.
Yes, the land parcels that we have a very systematic approach of how we want to monetize that. First of all, we need to go through some of the hoops to cross in terms of the titles and other processes, which is not entirely under our control from a timeline perspective, but we are going through that very systematically. This quarter, we got the approval of the board, and that is what we have put out to sell the land parcel in Ambattur in Chennai, and that is something that will help us to both invest into our products and also to reduce our debt levels that we have. So that's
is there a ballpark? Is there a ballpark value number that's been discussed?
Yes, I'm not sure, Siddharth, whether we put that number out or not. So I'll refrain from mentioning the number. Yeah.
Absolutely. As I let you go, just this point about the entire F1 broadcast to end this conversation, for not just for motor enthusiasts, but for the general investing public to understand this fascinating part of your business? A quick comment.
No, I think it's a very exciting business. So I think when we take our customers to these to look behind the scenes on what happens in a Formula One or a Formula E, it's truly an exciting story of how the technology comes to play, because this race goes to different countries every week, and how our teams are very agile in working in partnership with the customers to set the whole thing up in a very short period. All the hundreds of cameras today, high definition 4K, sometimes even 8K cameras, and catching the sound so that you get the buzz of all these activities, getting it all into a pod, from where we then take it through our cable systems to the central production facility, and hundreds of millions of viewers are able to watch it. And when we say that we are able to do this in a blink of an eye, literally a blink of an eye, and imagine a race happening in Australia, and all these camera feeds going to a central location in London, and then getting it back to all over the world, and all of that happening in a blink of an eye. So that is shows the power and the strength of the network that we have. The second is, as you said earlier, we just cannot afford to have a black screen moment during the event, right? So it's absolutely crucial to be able to have 100% availability in delivering this. And third is the teams that come together to deliver. So it's a combination of technology and a combination of the services that we wrap around that. So there is a team always with the Formula One, Formula E, goes around the world to deliver that. And there is a team at the back end which continuously monitors to make sure that this can go really flawlessly. So all of these come together to deliver this magic to the viewers around the world.
I completely understand that magic. We ourselves are a broadcast platform, and that black screen moment that you spoke about, Lakshmi, is perhaps the stuff of nightmares in our industry. But thank you for making good stuff possible all over, and all the very best for your next quarter. Hope to see you again. Viewers, with that, it's a wrap on this conversation with Tata Communications. You saw plenty of green on the screen, and hopefully management commentary, including some of the details that were provided by the Managing Director and CEO, should help provide clarity on the future prospects of Tata Communications. With that, it's a wrap on this conversation. We'll slip into a break and come back with more on the other side. Be with us. Bye-bye.
India's largest offering to the public, whether it through its OFS or IPO, is open. Hyundai, and of course another big ticket item in the form of Waaree Energy is about to begin its IPO sale. How do you see sentiment on Dadal Street given these two mega IPOs coming in? Do you think money is moving away from secondary into primary markets?
Well, I think 50,000 crores worth of amount is getting collected by way of three issues. One would be, of course, I think Hyundai is the largest one, NTPC Green following thereafter, and Waaree, of course, I think, which has already indicated